Today, in the down market, what can you do? Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and problem news with a distinctively Australian flavour. And I'm joined by Paul from Otivo. Hi, Paul.
Hey, Martin, how you doing?
Yeah, pretty good, thanks. And look, this is a really interesting conversation because clearly since the start of the year, pretty much all asset classes have been on a decline. So whether you're looking at superannuation, whether you look at stocks, whether you look at crypto, pretty much wherever you look, bonds, they're all down. And I guess that raises the question in my mind about, well, what can you control as an individual investor or property owner versus how much do you just have to wait and see what happens? And I know you've done some thinking about this.
Yeah. Well, we've done some research recently that really looks at that downfall over the decline in asset prices over the last 6 months or so. And it's really can have a dramatic impact on people. And obviously the markets being volatile they are and the ups and downs that they're experiencing. And a lot of people have declined, I suppose, in their real asset value of the last few months. But it really then comes down to, well, what's that going to mean for them in the longer term? And the research has really identified that for people at the age of 40, the ones who have really accumulated more assets, it's really going to hit them a lot harder. And potentially they may have to find themselves working for a decade longer just to reclaim where they've come from.
Right, that's a bit of a shocking idea, isn't it? Because actually we have been quite used to asset prices lifting dramatically more than typical income growth. You know, I look at property prices over the last couple of years. So this is a whole new world where effectively maybe asset growth is not going to do the same thing again. And if people do need to replace the lost value, it's a complete different lifestyle.
Yeah, it is. And look, I'm not sitting here saying the market's not going to recover and it's going to go down worse and worse. But I mean, if we look at this and say, well, look, 15 years ago, December 2007, the market was a little bit higher than what it is today. So over that 15-year period, the market, although it's gone up and down, is essentially stood the same from that point to that point. We can't control what the markets do. And that classic question, well, what do you think the market's going to do? The classic answer is, well, if I knew, should I tell people or keep that a secret for myself?
Crystal balls will be very useful at this point.
They're always great with hindsight, aren't they? They're very, very clear.
Absolutely. Absolutely.
But it comes down to, well, given the fact that we can't control what the markets can do, let's look at the factors that we can control and how we can utilize those to improve our situation and make sure that we're better off. And in the research we did, we identified that the average household, their decline of assets is about $70,000, but they've got around about $700, just under a month, that they could utilize from their free cash flow after all their commitments and debt and so forth. They've got to continue to pay. The average household in Australia is left with $700. And that's where, if we look at, if they had to invest that every single month, it would take them almost 10 years to get back to that sort of stage where they're exactly as they were in January this year. And that's why I put the premise they may have to work that much longer. We don't know what the market's going to do. But imagine if they did use that $700 each month, did the right thing, put it in the right place, and the markets did recover. Wow, they're in such better situation.
Yeah, and of course the point there is that when the markets are down, people think more about exiting the markets rather than actually thinking about going into the markets. But the fact of the matter is that with values lower than they were, there may still be opportunities, and timing, of course, is always difficult. But I think you've got to think long term, haven't you? You've got to think about how this is going to be in 10, 20, 30 years' time. Yep. And that's the whole point about investing versus trading.
Yeah, definitely. And that's probably the great thing, the hidden value of superannuation. There's all that, the tax effectiveness and so forth. But the mere fact that as we're accumulating assets, that most of us still are, the average Australians, I think, is in their early 40s is the average age. So you've got 20 years at least until you can access that money. So you're forced to think long term when it comes to your superannuation. But even then, it's still complicated, confusing, and even intimidating for a lot of people to know what they should do inside their super. So that's where the personal advice that people can get can add a great deal of value and make them better off in that 10, 20 years away from retirement.
Right, and of course, the whole point about what your platform offers is a rather different approach to advice. The democratization, effectively, of that information.
Yeah, like we said, I mean, the rules of the game, so to speak, around superannuation, how it all works, it's confusing. But so what we really want to answer, though, the one question that everyone has about their money is, what do I need to do next so that we can be better off? And that's what we do in Otivo. The great value of personal financial advice is it looks at your current situation, looks at the cash flow that you've got available, that $700 we just spoke about, and where should you put that so that you get the most value out of that, given your circumstances, and the aspirations and the dreams that you have for yourself or your family. And personal advice, it can really just come down to, you know what, if you've got debt, let's find a way to accelerate the repayment of that, because you're going to save so much money on interest. When you've brought that back down, you can use that extra saving to start optimizing your superannuation. And it's really around putting extra money into your super and optimizing the investment options inside your account. If you just focus on those three things, regardless of what the market's going to do, you're going to be in better shape by the time you retire.
And does it change where people are on the age perspective? Because I'm thinking that if I'm 40, then I've still got a couple of decades to worry about. But if I'm 55, turning 60, my runway is much shorter.
Yeah, and that's the difficult situation for people in that age right now, where you can almost touch retirement. Yeah, it's out there in the near future, and the market downturns like this can really have a much more dramatic impact on them. But we see continually that retirement, people always feel better off and are actually better off when they have their own home and they're getting advice. Because there are a lot of different things you can do as you get closer to retirement around improving your situation and improving the income stream that you can get from your superannuation. So it's taking that into account, that not necessarily rely on the market, but just making those smart decisions along the way.
So the interesting thing, of course, is that people need to have really enough personalized information to be able to make good decisions. Again, one of the things I worry about is some of the generic stuff in some of the newspapers and some of the online and even some of the forums. It's just too generic, it's too general and wishy-washy, and really it doesn't actually help at all.
Yeah, I mean, the old education is great for a lot of people, and I think it plays a role. But like you said, if it's not reflecting your current situation, it's awfully hard to know how do you apply those variables and those situations to your personal environment. Because say you're listening to someone talking about how superannuation works and they do a few personas, oh yeah, I can sort of see myself in that environment. Well, then you've got to take that home, take that knowledge you just learned. You've got all the other pressures around your family and your partner and other members of your family and the aspirations you've got. You've got to put them all together with the stuff you've just learned about super and still make that well-informed decision. It's going to be so much more effective if you can actually provide information about yourself and it answers the one question of what you should do next based on your situation. And that's what we do at Otivo. It's essentially enabling people to tell us where they are now, what they want to do in the future, and then answer that question around whether it's debt, around your savings, paying that home off quicker. Should I put more money into super? Am I in the right investment options? Gee, insurance is complicated. Do I have any? How much do I need? How do I go about doing that? So it's answering all those questions in that way that just lowers the stress level down for people so that they can sit there and enjoy themselves, knowing for well they've got a plan and they know what to do next.
And what I find interesting, Paul, is that list of questions that you've just posed, right? I mean, that's a long list, right? Yeah. But the point is, people sort of intrinsically, I think, know that they're important questions, but sometimes it gets a bit hard to sort of just worry about them. But the point is, you have to be methodical, you have to be structured about it. And so if you've got the right framework within which to think about it, you can make those complicated things quite easy. And very importantly, you can make the right trade-offs, because there are always going to be some trade-offs in this discussion, aren't there? You can't do everything, but the question is, what do you trade off over here compared with over there?
That's exactly right. The trade-offs is really, I mean, what wealth management's about, and giving advice around how people can help manage their finances. It's taking into account where you are, and there's so many different things you want to do. It's what order should you do those in so that you can actually create the best outcome for yourselves. But also, we're really looking at the situation whereby everyone's situation evolves over time. So just getting some advice today, is that going to be the right thing for you to do in 6, 12, 18, 24 months? So it's important when you're building this out, it's important to have that living plan that evolves with your situation. And that's where the great technology sort of platforms like ours and others out there that provide personal digital advice can really help people. I mean, even down to the situation we're developing soon is basically saying, hey, Martin, great news. You got paid yesterday. There was $500 left in your account. Why don't you take 400, put that into your super or your offset account or your kid's education fund, whatever's relevant for you. But imagine a situation whereby you've got this in your pocket and it's just a guardian angel sitting there letting you know what to do next as your situation evolves, because we can get all that information from your financial institutions. And that's the way advice should be. It's not product led. It's basically saying, this is what you should do with your money. And our perspective is, let's optimize where you currently are. Because it's not about getting new products. It's just optimizing the current ones you have to get the most out of them. And maybe later on you can find more efficient products as well. But it's getting those actions going and doing them first.
Well, I think it's a very important message, particularly this time of the year, just before the end of the tax year, right? So it's time to do a quick check and make sure that you're pulling the right levers and you've got the right options. If people want to find more about the platform, where do they go?
Just go to Otivo, otivo.com. You get a 3 month trial, so have a crack. By all means, send us any of your feedback you've got. We always want to improve it. And after that, you can subscribe. We'll provide a little bit of a link where people can get a nice little discount after listening to your podcast and so forth as well. But for us as well, the markets are turmoil, yes, at the moment. Hold on, stay the course of where you're going. It is a long-term game that we're playing here. But let's find out how you can optimize your situation right now. So the next time these sort of shocks come by, you're not going to worry about it. It's going to be water for ducks back, so to speak, because you've got your situation under control.
Yeah, control is the name of the game, isn't it? Even in these volatile times, there are things you can do. Paul, appreciate your time today. Thanks very much. Thanks for sharing the research, and we'll put the link below and people can go and have a look.
Thanks, Martin. Chat again soon.
Take care. Bye-bye.